Hi, good morning, everyone. Thank you so much for joining us. I can see a lot of you have already started joining. So we're waiting for a few more friends to join in, and we'll be beginning with the webinar at sharp 12 p.m. Hi, Satyam. You're on mute.
Hi, now can you hear me?
Yeah, I can hear you. So people have started joining Satyam. We are waiting for a few more friends to join in, and we'll begin at sharp 12.
Sounds good. Let me see if I have the background of Vired. That would be better. And let me know if once you're done with the introduction, I can share my screen and show the slide.
Sure, sure.
Mahima, a very quick question. My device will restart in about 10 minutes. Is it better I restart it now? Because it's a compulsive update coming on my computer right now.
Oh, so it'll require 10 minutes?
It will restart in 10 minutes. I can restart it now, but let me get my... So meanwhile, you're doing the introduction, I'll get my tablet. It's fine.
Sure, sure.
Right.
I believe most of you have already joined in. So without any further ado, we'll be starting the webinar. Very warm welcome, everyone. My name is Mahima Lal, and I'm the part of the engagement marketing team at Wired, and I'll be your host for today. So I will start this webinar by telling you a little about this platform, Wired, that we're on. So Wired is a premium LearnTech company, which is the part of the larger Hero Group, where we are on a mission to not only reimagine the way people learn, but also to build a better and a brighter future for themselves. We equip our learners with the right skill set, the right knowledge, and the expertise that they require in order to find success. So today we are presenting a webinar on the topic Career Paths in Financial Markets, Finding Your Niche in the Industry by Satyam Arora. So hi Satyam. Very warm welcome.
Hi, Mahima. Hi, everyone.
Everyone, a little about Satyam. So Satyam is a CFA charter holder with 14 plus years of experience in strategy, equity research, merger and acquisition, financial modeling. He has led teams in India and US and Netherlands and worked with institutions like Rapid Tree Capital Markets and Philips. He is also a certified CFA professor with overall finance and strategy teaching experience of more than a decade. A very warm welcome, Satyam, once again.
Thanks, Mahima.
We also have Prateek Sharma with us. Prateek has around 10 plus years of experience in finance industry. He has worked with consultancy roles and catered to clients like Nokia and Microsoft. He is currently associated with Vired as a subject matter expert for our finance-related programs that is offered by Vired. Very warm welcome, Prateek.
Thanks, Mahima, and welcome everyone. Yeah, hi everyone.
So everyone, as you all know that we are in a webinar setup and you won't be able to switch on your mics and your cameras. So we have a Q&A section and a chat box open for you all. In case you have any questions or any queries during the presentation or while Prateek is talking about the program, please feel free to put down your questions in the chat box or in the Q&A section, and Prateek and Satyam will be more than happy to answer them. I believe that we are here. I think over to you, Satyam.
Thank you. Hi, everyone. Let me also share my screen. I might have to switch from my current laptop to another one in the middle of the seminar. You know how it goes, especially with IT, but we will manage. Let me know once my screen is visible.
Yes, Satyam, we can see your screen.
Okay, so before I go into the details of financial planning, financial markets, finance, all these 3-4 terms that you might have heard are similar. Before we discuss going into that, I would like to put some questions to you. So for instance, what is the current value of a Bitcoin? Mahima, can we unmute the participants? Is that an option that we have?
No, we cannot unmute them. They cannot unmute themselves, but they have a chat box and a Q&A section where they can respond to your questions.
Okay, so I think the questions are with you guys. So I have 5 of them, whatever you want to answer, whichever you want to answer, however you want to answer. So what is the current value of Bitcoin? Don't search, of course. How many stocks are listed in the world and in India? If you get a chance tomorrow to work in any financial services firm, which firm would it be and why? If you could trade your financial lives, not your life, but your financial lives with one person that you admire, who would it be and why? And last question, if you have 10 crores, but you had to spend it all in one day, what would you do with that money? So I'm looking for responses, multiple responses to be in the chat box. Keep popping them up. I would like to see, what do you think? So approx 22 lakhs in Bitcoin value, okay. Bitcoin value 18 lakhs. So I clearly see a deviation of around 4 lakhs, which is approximately 20% of what you guys are quoting. That's where I'm getting. But anyway, keep on getting it. So 22 lakhs, 23 lakhs is Bitcoin. Okay, how many stocks are listed in the world and in India? Any idea on that? $9,000 in lump sum, 6,000. So there are about, in India, about 6,000, okay. There are about 65,000 stocks listed in the world. That is the first answer. And it depends on how you look at it. If you look at the key exchanges, it's about 2,200 in India. If you look at over-the-counter exchanges, it's about 4,000 more, so about 6,000, as you rightly said. Let's move to interesting questions. If you have to trade your life, financial life with someone, who would that be? Kamya, that's right. So it's about 2,000 in the listed exchanges, but there are OTC exchanges, small exchanges, regional exchanges. So in all, it becomes 6,000. Who would you trade your financial life with? If you know someone, or it can be a celebrity, financial celebrity as well. And why? I'm interested more on the why side of it. So Rahul has mentioned he would like to work for JP Morgan. Also provide some reasons, guys. Andrew Tate, nice choice. Shantanu. Who else? I'm surprised to see that no one is answering Jeff Bezos or, okay, Rakesh Jhunjhunwala. Perfect. Who else? Elon Musk, expected answer, has to come in today's world. That's an answer I was looking for. Warren Buffett, from investment point of view. Interesting. Okay. Vijay Kedia, interesting. If you had 10 crores, what would you do? One day to use that money. You have one day to use that money. Or did I say invest that money? Spend that money. That's the word I used. Okay. Property, invest it all, real estate. Okay. Diversified portfolio. That's a good answer, Srishti. ETF, stocks. I have invested in various stocks, great bonds, mutual funds, so varied type of investments. So that moves the segue to, it gives us the right segue to move into the next section where we do talk about what exactly is financial market. I'll keep it basic because there are times when we go into the details, the particulars of a lot of other things, but I'll keep it very basic right now. What is a financial market? When you use the word market, it resonates with marketplace, where trading of securities happen. It can be any type of security. It can be all the things that you mentioned, ETFs, stocks, bonds, mutual funds, real estate, foreign exchange, private equities, whatever. So it's all types of instruments and assets which are traded at a platform. That platform can be a regulated exchange, as we mentioned, NSE, BSE, or it can also be over the counter, which basically means stock, simple exchanges or regional exchanges or smaller exchanges which only list certain kind of securities. Why do we need financial market? We need financial markets for a smooth operation of a capitalist society. Now, this is a very strong word, capitalist society, because India is not a capitalist society. The biggest capitalist society in the world is US, of course, followed by UK. But every country, whether it's a capitalist country or a socialist or a mixed economy like India, definitely have a capitalist essence to it. And capitalist essence basically means that you allocate resources between businesses, entrepreneurs, and people. How do you do that? By financial markets. So that's how the financial markets binds us. Now, I'm assuming most of you would know, and that's why you are interested in this webinar, about stock market, about basic finance, about why you want to move into finance. So I will not go deeper into those questions. Rather, I would talk more about what are the various career paths available for you in finance, in financial market, in financial plannings. So one that we might have heard, and I'll go deeper into that to give you a flavor of each to help you decide. And meanwhile, I'll also share my experiences being in some of them. I've not been in all of them, as Mahima has just described. Corporate finance.
Everyone, I believe that Satyam has got that technical error, but he is right here. Satyam, you're on mute.
Yes, I'm in from my other laptop. The world of technology, but we are equipped fast enough to change. So can you see me? Everything is visible. I will open.
Yes,
and
we can
share
see you, but your screen has not been shared yet.
Yeah, it's gonna come. Give me 10 more seconds and the screen will be with you. Apologies, guys. Not expected as soon as I opened my laptop in the beginning. It gave me that, but it should now come up. Let me know once it's there. Can you see it now?
Yes, we can see now.
Okay, perfect. Yes, we were talking about overview of career paths. So we have corporate finance, where you discuss internally what your firm's requirements are. A common term that you might have heard about, investment banking. Then you have investment management, which is all the mutual funds that you invest in, research, hedge funds, funds of funds. I'll come to that. Then you have private equity and venture capital firms, which are smaller and they are trying to get into let's say, expand or scale their businesses. That's venture capital, but also some companies which are private and they want some investments. Then you have risk management, a very interesting field, which is in key demand as of now, because the world is a risky place and you need to mitigate all the risks. You hedge all the risks with various instruments possible. So a very interesting field for someone who is too mathematical. And then you have strategy and business development. Now that's where my last 5 years have been. Never in my life I imagined I will move from equity research. I was a sell-side analyst. I was working in different set of banks. I started my career in India, moved to the US, in New York, where everyone wants to go eventually if they want to work in investment banking. I worked there for combined about 10 years in various roles, but primarily in the equity research space. And then I moved to strategy and business development. People ask me, why strategy, why business development? Is it even finance? It is. Strategy might give you feeling of names like Deloitte or KPMG or PwC or Bain, BCG, McKinsey kind of companies. But nothing is complete without numbers. You have to understand. When companies go to any consulting organization with a proposal of that they want to increase their profits, why do you reach out to consulting organizations? You're suffering, you're having issues with profitability of your firm. It's all about numbers. It's all about finance. It's all about financial planning, financial markets. So that's why strategy and business development nowadays is becoming more and more associated with finance and with financial markets. I'll come to that as well. So first, most easiest one, corporate finance. Corporate finance is a section where you most likely would be working within a firm. So for example, every firm, call it Philips, where I'm working, call it Amazon, call it Facebook, Meta as of now, or Alphabet, or any other company that you can think about, always have a corporate finance function. And the team in that division works mainly for that firm. The reason that team exists, the purpose that team exists, is to serve, to maximize the shareholders' wealth, the company's wealth, through taking various decisions of investing and financing. For example, when you start a company, you need to understand, or for any company for that matter, not just a startup company, you need to understand where the money is coming from and where the money is going. You will be having various options or various projects. So you have to take a decision on which kind of projects to invest in, where will you get the money, what kind of working capital management needs to be done. So for example, we might think cash is readily available, but cash management is a big function in corporate finance that needs to be understood. And it's not as simple as that. So for example, you all would know what is inventory, what is account receivables, and what is accounts payables. I'm keeping it very simple. How you manage your working capital, you have to take some money from someone and you have to give some money to someone. This management, while we are saying it, it looks very simple. But when you have 20,000 vendors and when you have 50,000 account receivables or 50,000 customers, then this analysis and this management of working capital or cash becomes very hard. So this is where corporate finance function in a division helps to take those help to take those decisions basically. And all that comes with risk assessment. You need to understand what is your risk, what are the options available. So I've given a small decision tree, as you can see in the chart. I'm not going to that, but basically that is what you have to understand in order to hedge your risk, because every business runs with risks. The role in corporate finance spans over various divisions within corporate finance. It can be treasury, business development, cash management, pension analysis, pricing analysis. I'll share a very interesting story. I have always worked in the first 10 years of my life. I've always worked with small cap firms, or mid cap, I would say, which have about 50 to 200 to 250 employees. It was very easy. There was no such thing as, like, there was a team of about 5 people handling entire finance. One of them was a VP, one of them was CFO, one of them was AVP, you can understand there was no team structure. That's how it works, especially in the equity research space. Equity research is not about handling the own firm, it's about handling other people's money, right? So, but then when I moved to Philips, which is 80,000 people, it was quite a shocking cultural change for me, because
Satyam?
yeah.
Yeah, I'm really sorry to interrupt, but your voice is not clearly audible.
Give me 1 second. Is not change anything because I'm. Is it better now, Mahima?
Can you come closer to the iPad?
Yeah, better.
Yeah, it's better. It's better.
Okay. So so I was talking about my personal experience. So when I moved to a company which has 80,000 people, I was astonished to see the kind of teams which exist for corporate finance. A 50 people team that is solely responsible for cash management. I was like, why? What the hell did we need such a big team? But then I understood it's about pension analysis. The company provides pensions. So there are 5 people whose job is to talk about pensions. There are 10 people whose job is to talk to the government for pensions. And there are 6 people whose job is to do accounting on that. So that's the scale we are talking about. And that's the scale of this division that we refer to. I'll move to the second one, which you might all be very familiar with. Some of you might already be working in these companies, and many of you aspire to be in this: investment banks and capital markets. We all heard names of JP Morgan, Morgan Stanley, Goldman Sachs, and whether we are talking about in India. Of course, these firms do operate in India as well, but there are many Indian investment banking companies, Edelweiss Capital, and other companies as well, which are in this particular space. And many people ask me, what is the difference between investment bank and an asset management firm? So today I'm going to clear that up. Think about banks as institutions that advise companies on financing and merger alternatives. You reach out to companies like Goldman Sachs when you have any financing issues. Let's say you want to raise some money in the market. You want to merge or acquire a particular company in the market, or the other way around as well. You want to sell yourself. You want to have a spin out. You want to have your IPO listed. Whenever you need any, keep these 3 things in mind: financing, capital raising, and merger alternatives. And merger alternatives means everything: M&A, spin-off, IPO, whichever way your structure of the company is changing. That's when you go to investment bank for an advice. Investment bank do not have funds. Be very clear with that. They are an intermediary. They don't have funds of their own. Goldman Sachs does not have a fund. Of course, they do have it, but that's a separate division. But the investment banking of Goldman Sachs, investment banking of JP Morgan, they don't have funds. They have the ability to help you raise money from people who have funds. That's how you have to think about investment banks. Can you think about one skill, which is the most important skill that is needed to succeed in this particular space? A skill that an interviewee should have to succeed in this particular space. I cannot see the chat box. Wait. Okay. Now, okay, and market conditions, valuations, persuasion, network, business valuation, convincing ability, interpersonal networking skills, people skills, relationship management. In 3 seconds, you have put up quite a lot of things, but I would pick up few important things and call it interpersonal and networking skills. Tushar has written that, many of you have written that. It's a part of convincing ability, relationship management. They're all in the same lines. Valuation is one aspect of it. And of course, when you join firms like these, it is expected that you know how valuation works. It is anyway expected out of you. But very important is how can you deal with people, because this job is not about valuation. Of course, you will be valuing companies. Financial model banana bahut aasan hota hai, guys. Let me be very clear with you. It's a skill that can be learned. Talking to people and advising people and convincing people is a skill that cannot be learned. It will take time. Of course, you can learn it, but it takes time to master it. And it is not something that everyone can pick it. So that's a very important skill of a person that is needed when you have to be in this space of being an intermediary. Now, what are the roles
available in investment banking. Of course, you can now make sense of it. One is what is called as pure investment banking, where you are advising on M&A deals, underwriting of debt and equity. Underwriting basically means to get the money from others providing you the money. Then you have sales. There's a large team responsible for business relationships. That's exactly what we were talking about. They don't know valuation. They connect people between the demanding people who are demanding funds and people who have funds. Then, of course, investment bank also involves some trading, buying of stocks, bonds, securities, FX, many other things. Then you also most likely have a research division in investment banking. They recommend stocks, buy, sell, hold. And then some companies also have a private wealth management services, which is like investment banking services for high net worth clients. So, for example, if you have to deal with the Ambanis and the Elon Musks of the world, then they would have dedicated private wealth management services provided by some of these firms. So these are some of the roles available in investment banking. Contrary to this, but also linked to it, is what we call investment management. So there's a big difference between investment banking and investment management. I'll make investment management very simple. I'm assuming many of you invest in mutual funds, right? That is investment management. Basically, when someone takes the money from someone and invests that money because he knows how to invest it, that is investment management. So you, I, everyone gives money to, let's say, HDFC small cap mutual fund, taking a random example. We have a mutual fund about 10,000 rupees, 15,000 rupees a month. The money goes there. The person who is the fund manager is having a corpus of around 3,000 crores, 4,000 crores, 10,000 crores, depending upon the fund. And now he is tasked to invest it into various assets across the world, across India, whatever the mandate of that particular fund is. That is asset management. And this can have various forms. The crux will remain the same. This can have various forms. So for instance, this can be, if you're doing it on an open platform like a mutual fund, you can be a fund manager in a mutual fund organization, but you can also be a hedge fund manager. So for example, what a hedge fund does is they take money from not you and me, but companies. So, and that money, and also sometimes with private investors as well. So high net worth clients, they invest that money in various private companies or sometimes public companies. So that's a hedge fund. Then there are some insurance companies. So for example, what does LIC do? All of us know invests or take life insurances. What do they do? They take all that money. Of course, they will pay you, or not pay you, but pay someone else once you are no longer there. But how is that money coming to them? They invest that money, and that money is invested by fund managers. So many people say, I don't want to work with LIC, or I don't want to work with any of the insurance companies. They are the best companies because they have ample of money. The size of the money that LIC has is bigger than any fund manager in the country. Of course, they're not handling it properly, and it's a public organization, government owned. I know the challenges, but if we talk about the sheer amount of money, it's massive. And what do they do with that money? They invest. Of course, they will not let you take risk. They will not let you invest in dog coin or any other animal coin that is being created in this world, or Bitcoin, but they have money. So their mandates are very sort of low risk mandates, but they have a lot of money. That's what we have to understand. And then you have another part of asset management, which is sell side. Now, sell side provides recommendations and transactional support. Sell side do not have any money. They provide recommendations. So when you go to CNBC, Udayan Mukherjee, or maybe it has changed by now, my knowledge to that field is a little outdated, I would say. But the persons from various organizations comes and talks about buy this investment, buy that investment, or buy this company stocks and those kind of things. That's sell side. The difference between buy side and sell side is sell side sells the advices. Many people ask me, do they buy and do they sell? No, it's not about the stocks. It's about recommendation. Sell side sells the recommendation. They tell you if it's a good investment or not a good investment. They sell. They don't have money. They sell And if you like their investments, you will trade through them, or you will give them a commission or whatever. There are different models to it. A buy side buys into your own investment decisions and make the investments. So they don't need to convince anyone. If they think a stock is a good company to, or let's say if any company is a good stock to buy, they will just put the money. They have the money. Buy side has the money, sell side does not have the money. So that's the difference. But of course, both of them know how to value a company. Both of them know how to value a stock. And it's just the nature is different. So also the risk and rewards are different. I'll share another example here. When I started in the space of equity research, 2009, my then boss or manager or client, whatever you want to call, was already 80 years old. So he started working when my parents were not even born. So he started working around that time. So he was telling me an interesting story on sell side. For every, and you might relate it to the Wolf of Wall Street movie that some of you might have seen. For every 100 rupees of trade, you used to get 32 rupees. And he was talking in dollars, he was in US. So every $100 of trade, you used to get $32 of commission, 32% commission. And now the commission is what, 0.001%. And all of these algorithm tradings, high frequency tradings, and all these fancy tech things have reduced that, not even reduced that, they've just eroded it completely. So buy side, where of course there is more risk, at the same time more rewards, as simple as that. Career opportunities in investment banking space, think about HDFC, asset management firm, not the bank. There are various options available, right? It's not just the person who is doing valuation. So that's one thing I would really want you to not think about is, oh, I just want to get into valuation. That's finance. No, that's a part of finance. Recently, a folk from Hero Vired got placed into operations of equity research. That's a great opportunity if you want to learn. If someone does not have a background and if he's not getting a job in equity research, he's getting into the operations. His job is to manage everything on the equity research front. He won't be making stock recommendations, but the learning that comes out of it immensely helps him to move into the next stage of buy side or sell side. Another example, one of my best friends works with Goldman Sachs, but not in the investment arm, in the IT arm. So if you all know, or if some of you know what is call option and put option, those kind of things, no need to worry. It's a bit scientific derivative term. His job was to create the platform on which those options are traded. Now imagine a guy whose job is to create the platform. Of course, he will not be able to give the recommendation of which option or call option or put option to buy, but he knows how the entire system works, when to exit, when not to exit, how the profitability works. Amazing opportunity. So don't get fixated on, I want to be valuation guy and those kind of things. There are various options available. So for example, in investment management, you have sales and trading options. Again, similar to investment banking, you also have private wealth management options. Sell-side equity research, where my expertise has been for more than 10 years in the banking space. Then you have mutual funds, hedge funds. Funds of funds is basically when you invest in different hedge funds, it becomes funds of funds. Insurance companies, pension funds, not a lot in India, but globally, this is a big opportunity. And then university and non-profit endowments. Again, a concept starting in India, but in many universities, there is a fund available that will support the university for the future. And that fund needs to be invested. Simple rule of thumb, jahan paisa hai, wahan pe valuation ki opportunity hai. Bottom line. So you have to see where is the money. Wherever there is money, there is an opportunity to invest that money. Call it investment banking, investment management, family office. There are so many names you will hear, and so many names I still hear, which I don't understand. Then I say, okay, when I understand the nature of the work, now I understand, okay, what the hell does that even mean? But everything relates back to one thing. Wherever there is money, there's opportunity to invest that money. With that,
Satyam, sorry to stop you there. I just want you to be a bit closer to the tab. Some people are saying that the voice is very feeble.
okay. Apologies. One sec. That problem will not come in 30 seconds. One sec. I am being closer as much as possible.
Recording in progress.
One sec. I have a better stuff now.
Now it should be much better.
Yes, this is perfect.
Sorry, guys. These things happen when you don't want them to happen. But we are more than ready. Okay, moving to private equity. If there's any question, thoughts, please bring them coming. I think for some of you, the voice was clear. But now if it's not clear, it's not at my end. Okay, moving on. So private equity. So there's a simple difference between private equity and all of that you have heard. Most of the things that you were doing before, investment banking, investment management, they were with listed companies that are listed on any public stock exchange. Private equity is something that is not listed on a stock exchange. That's it. And there are many big firms which are private, which are not listed in the market, and they have same requirements. They have a lot of money. They have a lot of funds. They need help with financing those money. They need help to invest those money. And that all is called private equity. To keep it very simple, private equity, you can also think of, let's say, a company. The company is into cash crunch, and it's not a startup. It's about a 15-20-year-old mid-sized organization. It's into cash crunch, and it needs money to stay afloat. And maybe the business idea is great, but the company is not able to manage the money part of it, the financing part of it. So what happens? A company comes in, a private equity firm comes in. The private equity firm has a lot of money. They come in, they buy your company, they manage your company's finance, and then at the right time, exit the company. That is private equity. So based on where you are, there can be various roles available. So for example, you can be in the sourcing. Sourcing means trying to understand which companies to buy. Then once you understand which companies to buy, you will be due diligenting the companies. You will be understanding if the finances, the business model, all is a great investment or not. Then you execute the deal, you buy the company, you manage the company. For a private equity firm, you are a portfolio, right? They have many small companies that they manage. And then at the right time, when the value has been created, they exit their investments by selling it to someone else or by releasing an IPO, various methods, various options available. So private equity is also a very interesting space, high risk, high reward. There are various ways in which private equity team works. It can be a small firm that you are buying, so it becomes venture capital. There's no difference between private equity and venture capital. Go on the internet, there will be thousands of difference. But I'm telling you, there's no difference. It's about the size. Private equity mostly deals with mid-sized, large cap firms, and venture capital deals with ventures, which are in like startups and those kind of things. And then it also depends on what kind of capital you are providing them. If you're providing them the capital to grow the business, that is called growth capital. If you're providing them capital to sustain the business, that's called mezzanine capital. Again, no difference. There are smaller difference. See, if we don't make these fancy names out, you won't be interested. Look at the names on the screen: leveraged buyouts, growth capital, angel investing, mezzanine capital. Fancy, right? Attracts you. That's why you and I are here. There's no difference. Difference is providing money in certain stages of a company's existence. If you provide that money in the beginning, that's called angel investing, or venture capital when the business is already started, when the business is already successful a little bit and they want to grow, growth capital, and when they are having issues with some, let's say, staying afloat, that's mezzanine capital. Bridge capital, it's also called. What are they doing? Providing money. Simple, bottom line. There is no ifs and buts, right and left, associated with that. Okay, so again, stick to the basics, talk basics. That's in a sense that you have to follow going forward. Another interesting field is risk management. Now, this is a field, let me just say in the beginning itself, people who are super oriented in mathematics. And by the nature of it, you will see that many engineers are the engineers who want to get into the field of finance, see risk management as a very easy option to get into, because that's how the academic and the reality works together. So keeping it very simple, and it's not that in other sides mathematics is not involved. Of course, in valuation, in understanding the company, in trading, in understanding when to buy, when to sell, valuation is involved, but there are more skills to it. If I show you a valuation model, it is not a very fancy model. Of course, the assumptions that goes into the model are fancy, but it's not a very fancy model. I'll come to the questions, guys. Keep coming in Q&A chat, whatever. I will come to that. But risk management is more like, for example, you will have 50,000 Excel rows and you have to churn some kind of a relationship between one variable and the other variable. And you have to understand if there is a risk involved in this investment decision. So saying that HDFC is a good bank to buy, or TCS is a good investment, it does not need a lot of mathematics. It's a very simple model. You understand their P&L. So accounting background, P&L background, finance understanding, CFA, those kind of things are important, because that's where you will be going when you have to take an investment decision. If there is a risk in the investment decision, risk management helps you. So as the definition stays, identification of risk, analysis of risks. Analysis of risks is a very difficult task when you have, like, sometimes the data that you deal with is not even possible to populate on Excel. And Excel has about what, 1 million or 10 million rows possible. Sometimes the data exists in tools which are beyond Excel. So that's the kind of churning of tools that we are talking about. Then of course you use certain macros and fancy things to come up with understanding what is the risk in these investments. So and again, very much needed in current times, global instability, uncertainty, risks around us. So it becomes very important to have certain kind of risk management function in an organization. Now, why work for a risk management? This is a function which is available in all the companies. Now think about it. It's not just finance risk. That's another thing I would like to highlight. It's not just financial risk. There are operational risk. There is a, for example, there is a risk that the CEO might die the other day. What will you do? Imagine the leader that of the firm dies. What will happen to the company? That's a risk. That's called operational risk. It's a part of operational risk. How do you handle such risks? Again, you might come up with various answers, various things right now, but I'll share a very interesting story here. The C-suite are not allowed to travel in the same plane when they're going for the same meeting. That's how they manage that risk. Tomorrow, if the plane goes down, you cannot imagine the entire executive committee of a company going down. How will the company run tomorrow? It's not possible. They take for the same meeting, because of course, I'm assuming multiple planes runs to various locations every day. They take different planes. So again, this is not about numbers, but I'm telling you that risk is there in every, you walk outside your house, there is a risk. How can you manage that risk when it comes to finance is something which this division of risk management talks about. Sometimes this division is not a solo division in the organization, but every team will have certain risk management opportunities. Risk management is a big opportunity when it comes to private consulting roles, roles in organizations which are in the consulting space. So it's mainly for people who really enjoy problem solving. As I gave you a problem, right? C-suite continuity, that's what it's called, C-suite continuity. And it tests not just your qualitative, but also a lot of your quantitative skills. So that's why, going back to what I said, many engineers do it. Work-life balance is decent. It's not as bad. Another reason why I moved from equity research to strategy and business development was work-life balance. Working starting around 7 a.m. in the morning when it's snowing in New York, minus 25 degrees outside, be in the office, start working until 7 p.m., come back with same snow. It was a manageable thing for a few years. But again, the work-life balance is different in every field. Risk management is a little bit easier, but with a decent compensation to match as well on that part of the world. Now, moving to where I have moved, and then I will take a pause for any questions that you are popping up in the deck. So strategy business development. Now, this is a function which is expanding rapidly within organizations. It's an internal function. It sometimes is a part of corporate finance, corporate functions. but sometimes it's a separate standalone functions called business development or corporate development. You will see different names to it. When you are in a strategy and business development, you are not in a client role. You are working for your own firm. That's one thing. I'll give you an example. More than the slides, let me give you the real example of what I do. I'm in strategy and business development, so I can talk about it. When my company wants to invest in an emerging market, let's say Latin America, which is Brazil, Mexico, and the other countries in South of America, they ask my team, what is the opportunity? How big is the opportunity? It's all about numbers. So my team then understands, okay, let's talk about Brazil. What are the various, let's say, what are the various macroeconomic trends in Brazil? How Brazilian economy is expected to be in the next couple of years? Finance in the picture. What are the various types of companies which are emerging in this particular economy? Now, when you talk about specific products, will the product sell to consumers, to hospitals, to various kind of, let's say, customers in the country? And if yes, what would be the adoption of those products? All numbers, all finance. You cannot even imagine the amount of Excel that we do. And people think, oh, strategy, it's all about making decks, right? When I joined one of the seminars about 10 years back, similar seminar, but I was not a speaker, someone else from strategy was. He was like, yeah, it's all about making slide decks. And when I joined the strategy team 6 years back, deck came after 6 months. The first 6 months, it was all about numbers. Things have changed. In fact, now people are moving away from decks to Word documents. That's how the organizations are moving. Look at Amazon. Using decks is banned in that company at the higher level. They need Word documents. So things are changing, and strategy is becoming very close to finance, very close to innovation, very close to implementation. Because if you have to think about future, and that's what strategy does, you need to understand the mathematical consequences, profitability consequences, your P&L consequences. Because if you choose a particular strategy, why are you why is the strategy team even important? Because the strategy team will tell you where the money lies in the future. So it has implications on your P&L. It has implications on, I'll tell you how the implications are there on the stock. When my company says, or when my team says that the company should invest there, and when my CEO picks up that strategy to share it with the investors, if they like it, the stock goes up. If they don't like it, the stock goes down. That's how strategy is core to the finance of the organization. So it's not oh, strategy is different, it's all about slide deck. It's very, very interesting and very, very important. Okay. We can share it with you, but this slide talks about being mindful of the time as well, because I want to take more and more questions. This slide talks about various aspects of a job: exposure to the clients, exposure to senior staff, travel requirements, desk time, and number of hours. Of course, you can expect number of hours in investment banking to be very high, trading to be very low, because you will trade when the market is open. Market opens from what in India, 9:30 to 4, 9:30 to 3:30, depending upon that. Then so that's where sometimes number of hours, desk time, travel time. So in investment banking, if you have a job to sit and work and create financial models, then your travel time in investment banking is low, but your desk time is high. But if you are in private wealth management, you are highly exposed to senior staff, senior clients, but your travel time and desk time is basically split. So this is to give you a snapshot. Some people have a dream job that I want to be always traveling. Then pick up a sales job. See, it's very high travel. You will be highly exposed to clients, and you will be in business meetings, wearing tuxedos, suits, going into meetings. That's how you have to think about. So you have a certain way of thinking about how your job should look like. This will help put things into perspective. And lastly, what it takes to get in. Of course, deep understanding on valuation. You need to understand how valuation works. Whenever I start the valuation session with FVR batch, which Prateek will talk about eventually, people ask me, sir, DCF, let's do relative valuation, all the fancy terms. Some of you might know, some of you might not. But I say, you know what is the meaning of valuation? How to value anything. It follows the same premises, whether it's the value of me, value of a company, value of an instrument, value of foreign exchange, value of a country, which is what GDP, right? And value of the world, global GDP. Valuation works with same principles everywhere. So understanding that principle is key, rather than saying, oh, I need to learn leveraged buyout. All these things are add-ons to valuation. Leveraged buyout is when you take debt to buy a company. So all these things, you will hear many fancy terms, and you might have also seen those fancy terms in the last couple of minutes. Understanding the basic meaning of valuation, 90% of the financial analysts are not aware of that. So that's where emphasis should be. Market awareness, that's why I asked you a question. Now going back, what is the value of Bitcoin? Some of you said 18 lakhs, some of you said 23 lakhs. There's a difference of 5 lakhs, which is about 25%. So someone is lacking the awareness. You have to find out that. It's not just about the awareness of your own field. I was a banking analyst for 10 years. I was aware of banks inside out, but I was aware of the US banks because I was a US banking analyst. That was not good on my part to not be aware of HDFC. I am from India. I am an Indian working in US. That's fine. But why am I not aware of the valuation of HDFC, ICICI, and SBI? Although I'm working in US and I know everything about Bank of America and Goldman Sachs. No. So your awareness has to be a bit higher. Reading those kind of things. And I don't want to lecture you upon reading economic times, but knowing what's happening around you is key. Analytical skills, super important. You should be able to analyze and synthesize the numbers. Read about it when this session is over. Analysis is one thing. Synthesizing is another thing. In the world of data, where there is tons of data available to you, and you are busy analyzing the data, making meaningful conclusions with that data is important, and that's called synthesis. To break down things is easy. To sum up things is difficult. So synthesis is that, and that's a very important skill that needs to be learned. And then you have communication, stakeholder management. I think we have said it all about this. And lastly, in the interview, whether you're inquisitive or not, I don't know. In the interview, that's how you crack the interview. You have to show that you are inquisitive and you have hunger to learn. That's what it takes to get into these roles. Now, I don't have a very fancy list, because if you go online, the kind of things that you should learn before setting into an investment banking interview, or the kind of things that you should be knowing, you will have huge lists. So I'm not here to copy what internet says, but I'm just telling you, if you master these 5 things, that's the jobs that we have referred to will become easy. So keep those lenses in mind. The list is not huge. I'll take some of these questions now. Give me 1 sec. I'm trying to go to what about CFA? So Srishti is asking a question. What about CFA? Is risk management for us? Srishti, I'm not sure of your background, but CFA is quite different from risk management, because risk management, you might know a program which is not similar, but one of the programs like CFA, which is called FRM, Financial Risk Managers. That is all about understanding the numbers and making useful meaning out of numbers. And CFA is more about valuation. CFA is more about understanding the stock markets, the instruments which are available in the market. So also, to put it very clearly, risk management sometimes don't know about instruments, how they are traded, what is the profitability, when to invest, when not to invest. So risk management is not about investment. CFA is all about investment. When you want to talk about or helping any company or yourself in investment decision, that's CFA. If you want to talk about risk management, or if you want to talk about not the investment decision, but to manage the overall risk, that is risk management. So that's very different. And Rohit has another question. Do these companies like Philips and other non-traditional financial companies also involved in financial market? Of course. That's called cash management, treasury. As I said, team of about 50 people just doing cash management. We need money from the financial markets. That's one. And we need to use the excess money profitably. It's not that that excess money cannot sit in bank accounts. If we have 1 billion excess money and it is sitting in bank account without any interest, that means we are losing a few $1,000 every day. So you have to invest that money. And sometimes these are not very, let's call it, risky investments, because if we have 1 billion and we want to invest that money because we need that 1 billion to pay salaries next month. So of course you will not invest it in very risky instruments. Sometimes you have to make a decision between stocks and bonds. But at the same time, investment decisions are required. And again, depending upon how much it is risky, there's a portfolio, of course, that needs to be followed. X percent is risky, 90% maybe non-risky, and then some portions you can also play around with that money. But definitely all of these companies have investment arms. You might call it fancy names. You can call it corporate finance, treasury, cash management, cash office. There are different names to it, but they essentially do the same job. They take care of the money. Okay, I think the questions will be there. I see from Vired the communication coming. I will take a pause here. I'll hand it over to Mahima and Prateek from here.
Sure. So Satyam, meanwhile, you can also refer to the Q&A section and you could just choose whichever question that you would like to answer.
Should I do it now?
You can do it after Prateek is done with his part.
Okay.
Yeah.
Sure. Thanks, Satyam and Mahima. So definitely, Satyam has already pointed out very clearly what are the different career options that are available, in terms of the finance domain, the finance industry. A very important thing, even, I realized in my tenure of my experience of 7 to 8 years working into EY and Deloitte. So what I realized that, it's very important for our programs, whatever we do in the graduation, post-graduation, to have those relevant practical skill sets. That is very important when it comes to any job role. We have to perform, right? And for that performance to happen, we need to have that practical skill sets. We need to understand the problem from a wider lens, understanding the real business problem, and then maybe identifying how to implement the concepts, whatever we have learned, in order to solve that business problem, right? And what alternative options could be there, understanding all those aspects. And for that matter, I realized that today, how the students or how the candidates or working professionals can upskill themselves into these kind of programs and maybe build a skill set that is very much relevant to these kind of job roles, what Satyam has nicely talked about. Right. So understanding all those aspects, I just doing my research. So we have a very good program that comes up with the Hero Wired. So Hero Wired, just to give you, I think already Mahima has given the background, but yes, definitely it is one of the latest initiatives of Hero Group itself into the EdTech space. So Hero Group, I think it does not require a mention, but then definitely it is a leading business conglomerate today. Approximately $5.5 billion is the net worth. And people mostly have heard about companies like Hero Motocorp, Hero FinCorp, Hero Electronics, but very few people, guys, let me tell you that know that Hero Group is also a part of education for a long time now, part of the education industry. Right, the colleges like the premier institutes in India, ISB Hyderabad, we have BML Munjal University, Dayanand Medical College in Ludhiana. So a lot of initiatives into K-12 segment as well, right? So Hero Group always has been a part of the education and also been into the industry for a long time now. So ideally, the one thing that I said where people lack is the practical skill sets and the practical exposure. So, acting as an intermediary who can bridge this skill gap between academia and the industry, that is the role which Hero Wired is playing by providing some, very, very apt programs to build the skills that is required to work into the industry. And one of the programs that we have, which can give you the career outcomes like Satyam has talked about. So the program is, a program into certification program into financial analysis, valuations, and risk management, right? So it's basically a 6 months program, right? And it's a collaboration with Columbia edX University. I'm not sure how many of you have heard about Columbia University before, but let me just give you a brief overview that it's one of the dream universities for finance professionals. And the reason behind that is, it's maybe one of the oldest, like 1754s. It was called like King's University before. And the candidates, the alumni who have already graduated from Columbia University, it includes Mr. Warren Buffett, who is an investor of the millennium. People definitely find him an idol, and Mr. Barack Obama, and also Mr. B.R. Ambedkar from India, who has built the Constitution of India. So these are the kind of people who have graduated from there. And this program that I'm talking about, it has adopted the curriculum that has been designed by Columbia University, right? In addition to that, the industry professionals, the industry players like Satyam and a lot of others as well, Mr. Shivakumar Bhavamala, Mr. Frederick Muller. These are also the faculties who are there in the program and giving you that practical skill sets and exposure in order to work in these kind of job roles. So it's a blend, understanding in a live and interactive session how you work on a real business problem, how you implement the concepts there. The faculties make you understand these things by working practically on the Excels, making you build the valuation models, helping you with the entire analysis of the things, and then they give you projects and assignments to work on. So these projects and assignments you do, because that will make the difference when you sit in the interview. When the recruiter asks you, as an equity research analyst, have you ever prepared an equity research report? And if for a person who has done this kind of program, the answer will be definitely a yes, because that is one of the capstone projects that we do into the program, right? Where you go through, a lot of equity research reports of the, listed companies, the blue chip companies that are listed on the NSE, and then you prepare an equity research report by yourself, right? So that is where you get the entire clarity. And when the recruiter grills you on these kind of, questions around that report, what is your analysis of this specific industry, what is your analysis about this company, that is where you will be able to answer those questions, right? So definitely this kind of a program really helps the candidates to build that skill set, and by bridging that gap between that academics and the industry that lies there. So yes, it's a 6 months program, and it comes with a lot of practical projects, assignments. In fact, just if I just show you the curriculum and the brochure, I think Satyam has already talked about these aspects. So let me just share my screen so that you can also see the curriculum, what we are covering in the program. I hope yes, you can see the screen. So this is the program that I'm talking about. And
yes, Pratik, it's visible.
Yeah, and definitely it comes with placement assurance. So placement assurance is something that, helping the candidates finding those relevant job opportunities that are available in the market, right? So that is a thing that Vired is already doing because of the vast, large network that Vired has built, right? So we are able to provide those relevant job opportunities to the candidates who are looking for these kind of, job roles. And this is very different from the traditional finance that used to be there. Initially, I mean, if I could see, the finance professionals initially knew only about taxation, audits, for accounting, and maybe transfer pricing, these kind of compliance, majorly the compliance roles. But then it has moved slowly and steadily to the other side, where people today now know the rewarding careers in finance, be it a treasury manager, be it a equity research analyst, be it a risk analyst, or a financial analyst, and they want to move into these kind of roles. So that is where this program specifically comes into picture, and having definitely a collaboration with Columbia edX University. So it is this. So if I just take you to the curriculum part, so we are covering the bond market and valuations, we are covering the aspects related to foreign exchange trading in the market, because as Satyam said, as a treasury person, you need to know all the markets so that you can invest the funds, you can speculate, you can hedge the funds for the clients. So in that matter, we are helping you understand the entire credit market, the derivatives market, where we do cover the futures, forwards, hedging applications of futures and forwards, all the swaps as well. So apart from that, yes, corporate finance, a very important aspect. People wanting to work as financial analyst or maybe as a financial advisor. So this is definitely important for them. Satyam talked about few of the tools that we need to use in corporate finance. Yes, we do cover all these aspects, and it is all practical, as I said, right? So how do you read the financial statements, be it the PLs, the P&Ls, the cash flows, the balance sheets, and then how do you understand the financial feasibility of any project or any investment, be it, right? So for that purpose, we do cover the interpretation of the financial statements. And risk management and risk and return is also one of the important aspects. As Satyam rightly said, that if you have those quantitative abilities and you can interpret the relationship between two variables, so then it's so you can get into risk management aspects as well. And it is a job role which is available in all the industries, all the companies today, right? So yes, how do you calculate the risk, how do you identify the risk, and how do you take steps to mitigate that risk? So these are the kind of things we definitely talk about in the program through the curriculum that we have. Then we do talk about equity research aspects, where as an equity research analyst, you will be doing a lot of fundamental analysis, technical analysis, you will be doing the relative valuations, and also you will be doing the geopolitics maybe analysis, the competitors analysis and all that stuff. And also as an equity research analyst, you should have those writing skills, so that you can draft an equity research report. It's a 150 to 200 pages kind of a report, and then you recommend people to buy, hold, or sell a stock, right? So I think Satyam is giving you the practical understanding around that role, and definitely we teach you on that aspects. So, and apart from that, some technical bits is very relevant for people into the finance domain today. They need to know about the tools and technologies, specifically advanced Excel, SQL, VBA, Power BI. Data visualization is a very important thing today, right? So how do you visualize that data using these tools and techniques, or be it on the advanced Excel? How do you prepare those dashboards? So for that purpose, we do cover the technology aspects into the program, right? So yes, once you go through the entire modules, you can create a specialization for yourself by doing the capstone projects around that specific career outcome that you are wanting to build for yourself. So maybe 4 to 5 months into the program, the last month or maybe 1.5 months, you can build around that specialization by doing more projects around that that specific career outcome, right? So definitely that is also what we cater to, and these are all live projects, real industry problems that we cater to, right? So yes, this is about one of the programs. Talking about the faculties, yes, as I said, we have Mr. Shiva Kumar Bhavamala. He's also one of the experienced, seasoned professional that we have. He has worked into Barclays Capital, United Kingdom. He has worked into ICICI Securities as well, having approximately 16 plus years of experience, right? And apart from that, we also have Mr. Lalit Fulara, who's also one of the full-time faculties we have at Hero Vired. So these are the kind of faculties, and he's also a CFA from US. We have Mr. Frederick Muller, who is again one of the most seasoned professional, having approximately 30 years of experience into risk management, into market risk engineering and things. And he has worked with banks like Bank of America, Merrill Lynch. So this is the kind of exposure you get with these kind of faculties. And definitely we have Satyam as well. He's already introduced, and he's also one of the faculties who teaches us the equity research aspects and the valuations and stuff, right? So these kind of programs today is very much required, as I said, repeating myself, to build that practical skill set. And then we do help you with the job opportunities. Now, not only by doing that hand holding in terms of the technical aspects. We also cater to the soft skill aspects, how you speak, what you speak, what you communicate in front of the recruiter, and then also with the aspects of the interview preparation, right? So where we first of all focus on the digital presence, your CV, your LinkedIn profile. These are today very, very relevant and very important. Until unless you don't have the right skill sets and the keywords mentioned there, you will not be getting any calls from the recruiters, because the AI is finding your CVs today, right? So we mention those practical projects, the skill sets and everything, and then we prepare you for the interviews. There are a lot of mock interviews taken by the faculties itself, by the career coaches. There is one-to-one career coaching and mentoring sessions that we conduct every 1 to 2 months in the program. And we also do a lot of careers assessment tests in order to understand how much ready you are for that job role after every 2 to 3 months. So post doing all those things, then we, take you to the program, take you to the recruiter, basically, where you sit in the interview, and the onus that only one onus lies on your shoulder is to clear that interview for us, right? So this is an end-to-end journey how we cater to the candidates who are looking to upskill and get into these kind of job roles. So yeah, definitely, I think that is all from my side, and I think Satyam and we are open to answer the questions. So whatever questions we can take around this.
Yes, so everyone, the floor is now open for all of your questions. Please feel free to put down your questions in the Q&A section or into the chat box, and we have Prateek and Satyam here to help you out with your queries.
Great. I was just answering these questions in the background, Prateek, so I can take a few of them, and depending upon which one you want to also pick up. So Nikita's question: what qualification one should have if one wants to get into equity research, venture capital, any other roles? So I think the last part of the presentation, that's where we talked about valuation, your interpersonal communication skills, and of course your analytical abilities would be key, would be very key. Subhashni is asking a question: I would like to know your educational qualifications to work in strategy and business development. Mine. Okay, so less educational qualifications. Okay, I did my BBS from Delhi University, from College of Business Studies, and I have my CFA. So it was not a qualification to enter into strategy and business development. This will not be an enough qualification where I entered at the level I entered. Of course, in my campus as well, we have McKinsey, BCG, Bain, these kind of consulting organizations in strategy and business development coming. The reason I was hired for two things. Sell-side equity research teaches you a very important soft skill. And that is, let me phrase an example to prove this. There is a saying which says, you can get the water to the horses, but you cannot make them drink the water. It's as simple as that. You can get something to someone, but you can give him an investment idea, but you cannot make him invest the money. And people who know how to convince the horses to drink the water, or to make the big horses to invest the money, that's what sell side is all about. In sell side, my income was coming simply because my clients will buy. It's not about my investment ideas. So if I cannot convince someone to buy the stocks that I recommend, I'm not getting my salary, or in the previous job. That's how it was. So that skill set is why I was hired in the strategy and business development team, because that's exactly what I need to do now. How to move forward if you want to open a portfolio management company? Very simple. What is your current portfolio? What's your current portfolio? That's important. Have you invested your own money? Yes or no? If you have not invested your own money, you will not be able to open up your own company. A very close friend of mine has his own company. He has started, and for the first 5 years, he showed his own private portfolio to clients to get the money. So you need to have your personal experience showing that you have the capacity to earn returns. As simple as that. Then I have 2 or 3 questions which talks about AI, chat GPT, AI technologies. Can they replace humans? Can they machines do way better than way better. So how will this play a role in finance? ChatGPT is opening the world to the risk levels you can't even imagine. You can't even imagine. So that's where I would say the opportunity lies. And that's why I said risk management is very important and those kind of things. So that's one aspect, that more tech friendliness leads to more opportunities. I have another example. Algorithm trading. What happened to that? Algorithm trading, once it started, high frequency algo trading, you might have heard this term. What happened to that? It started killing all the trading jobs. Because you could make trades with softwares. Softwares can see the patterns, technical analysis, as you guys know, patterns of stocks, ups and downs, resistance levels, support levels, what people keep on looking also online. What happened to those softwares? Where are they now? You need human intervention, as simple as that. I believe all these things are there, but it's a fad. Goes up, goes down. The way it is going up, the similar speed it will go down. Of course, there are parts of it that will be preserved and that will be helping going forward for years and decades and centuries to come. But to say that ChatGPT will be, nowadays we're saying ChatGPT help someone clear the exam. Is it even feasible? Yeah, okay, great, one time. But is it even feasible? Yeah, not for this purpose. But ChatGPT can maybe help solve weather forecasting problems or some bigger problems or some even company specific problems. But if you ask, can it help me solve the profitability of my firm? It will not have any answer. So I really feel all these things which really changes the direction of an economy, the economy goes back to the previous direction and human intervention will always be needed. I have 20 years of experience in wealth management, 6 months derivatives trading, FinOps, currently doing masters in Europe. What do you think? Ideal country in Europe to work trading roles? In the end, to be honest, and then another question I have, will this course get me jobs in Europe, UK and Europe? I let Pratik take it, but I have one simple stand. In this course, you are not learning about India. You're learning about a skill set. You're learning about valuation. You're learning about financial analysis. You're learning about stock analysis. You're learning about equity research. So it's not a skill that is specific to India. So saying that, how do I get a job in UK, US, or wherever? It's a skill. I mean, I did all my studies in India. I did my BBS in India. I did my CFA when I was in India. And I worked in US and I worked in Netherlands. So I'm a living example to that question. Why is there a no hedge fund culture in India? Risk. Hedge funds are risky. It's very risky. So from that point of view, riskiness is limited and of course so it's also about the depth of the country's financial markets. The depth of India's financial market is not very, very deep or very large, as you would call it. So for this reason, hedge funds don't exist, or they do exist, but very, very limited. And for anyone who's trying to look for change, I see this question from Sachin about 18 years of experience as an accountant. There are many instances where people have 20 years of experience and they want to move into some kind of a role. You have to understand, now you will not start as an intern, right? As simple as that. You are a director in a firm doing accounting and you want a director in equity research. That's not going to happen. You have to look for roles. Either you're able to take a huge pay cut, and that is something which is not very ideal. Sorry. But the important thing is you have to think what is closely associated with accounting. You cannot go into investment banking at that same level of a managing director, but you can definitely look for roles which are into financial planning analysis. From financial planning analysis, a corporate finance role is very closer. You can move into cash management because you have so far reported cash. So going into cash management is important, and most importantly, internally. So you are 18 years in a firm or in a field, you should be able to convince the management team, your manager, the manager above you, that you are ready to move to corporate finance. So your interpersonal skills are important. I think about some course questions are there. So Pratik, I will
Yeah,
for you?
so definitely. So Suresh is asking the fee for the course. Definitely, Suresh. So our consultants will get in touch with you. They will explain you the entire details regarding the program and talking about the fee structure and everything. Also, one of the questions that you have is the salary package after completion of the program. See, salary would definitely depends on two aspects. One is your relevant experience that you have earlier had, and with the transition that you are wanting to do in by doing this program, so that relevant experience and your skill set, that these two things will definitely define your salary package. But to give you an idea, we are able to easily manage a salary for a fresher. I'm talking about a fresher, let me repeat, it's approximately in a bracket of 7 to 12 lakhs per annum, and that it depends on depending on his skill set and his level of understanding. So a fresher is able to make something between 7 to 12 lakhs per annum, right? We have got people placed for approximately 18 to 20 lakh rupees per annum as well. So we have had 100 plus 100% kind of a hike into the programs. We have got our people placed into the companies like JP Morgan, Goldman Sachs, as well. So I'll just share maybe a one pager that will give you the idea about the kind of transitions we have had. So maximum offers that are currently available, which is with the CFO roles as well, is approximately 60 LPA around, right? 100% of the hike has been achieved by the candidates into the program. Average hike is somewhere around 58%, which people have achieved. So maximum package which we have achieved till now is 18 LPA. But having said that, we do require those kind of candidates who are coming with the relevant skill sets and are looking for opportunities. So basis this program and having that relevant skill set, we can definitely place them at higher packages, right? So senior research analyst roles, financial analyst roles, treasury manager roles, equity dealer roles, business analyst roles, into debt restructuring. So these are the kind of roles which we have got our people placed already into. The top companies that we already have got our people placed is Goldman Sachs, Future First, JP Morgan, Mazars, MK, all these kind of organizations, right? The freshers, as I said, these are the people who have got placed senior executive at a package of 7.85 LPA, a business analyst at a package of 7.5 LPA. Is this and then if I talk about the working professionals, there have been some good 90% hike, 67% hike, 37% hike into the salaries, and even 100% as well. But more than that, at some places it has been that we have got our people associated with very good brands like JP Morgan, Goldman Sachs, and all, right? So I think this gives you a flavor of the kind of transitions we have been able to make, and some of the people are coming even from a non-technical, non-commerce background, rather I would say. So is the transition possible if you are coming from a non-commerce background? Definitely yes. But the time commitment that someone requires, if it's normal like 12 to 15 hours for a person coming from a commerce background, so maybe at someone coming from a non-commerce, it would be maybe 18 to 20 hours in a week's time we are talking about. So definitely it's the time commitment, it's the effort that you put in to build that skill in these 6 months, and then post completion of the program, that will give you the kind of packages, the kind of companies, the kind of compensations that you are wanting. That's a byproduct, guys. Try to understand. It totally depends on the skill set, what you build for yourself, like Satyam has also said, right? So I think this was regarding the transitions and packages. Any option also? So yeah, so let me
Pratik,
check
you
that.
can also refer to the chat box. We have a lot of
Okay.
questions in the chat box itself.
Okay. Yeah. So I think we have answered this fee of okay, this part. The salary packages is also done. So yeah. So Satyam, I think there is no foundation as to with the years of experience that someone is already into the profile, like 12 years, 15 years, 18 years. So it's I think all about the skill set. What would be your say on this?
No, so I definitely, and also I just mentioned it to Rahul. Doesn't matter what kind of experience you have, doesn't matter which field you come from, doesn't matter uh, whether it's banking or whether it's a BPO experience. I think most important, everyone, you have to look for what is the closest opportunity available. A person who has been making calls in a BPO space cannot expect to be a leader of the investment bank. Let me be very clear with that. Even after this job, so you have to understand what is the, or if you're looking to start as an intern and start as a junior analyst or financial analyst, whatever the term is called in that particular field, that is one. But I'm assuming that if a person has worked for about 10 years into the space, then you are not willing to compromise and start as a fresher. If you are, then everything is possible. You can also be an architect. But if you are not willing to compromise on that, then you have to look for the closest opportunity available. And for example, if for instance, I think Rajesh has mentioned about option in the 11 years of BPO and banking experience. Now, I don't know what kind of banking it was, but then you have to see what is the closest available option that you will get in the corporate finance space. I was answering to one of the persons on the chat as well. He has experience in the accounting space. So moving from financial planning and analysis to the space of um, corporate finance in the cash management is important. So when you explain to your managers that you are ready to take on that next challenge in a different team, then that should be very feasible. So look for a bridge situation. To give you another example, when I moved into strategy, I was a part of a team called market analysis and forecasting. That team is in strategy, but the job of that team was to project, as I was giving an example of Latin America as well, the job of the team was to project growth of certain Philips related products in certain countries. So what am I doing before? As a sell side analyst, I was projecting stock prices. In strategy team, I'm projecting market forecast of various products, still doing forecasting, right? So what was common? Forecasting was common. So you have to think for the best link. And then of course, now I can move into M&A transactions. I can move into any other area which is more complex. So you have to take shifts, because I was not ready to go lower on the compensation. So you have to be very clear. Are you willing to go lower on the compensation, or are you willing to learn a completely new field? And this question is mainly for people who are talking about moving extremely between like coming from a BPO background to a investment banking background. So that's what I would say. Look for commonalities between your current role and the future role. There's always commonalities. I told you I was equipped to, I was not a sales guy, but I was equipped to convince people for investments. That is what is needed in many jobs. So that is why I was hired.
So Satyam, if you can take Tushar's question, Tushar Kapoor, so he's in the chat box.
I need to find out, is it way back? Is that question? Oh yeah, that's a long one. I have experience of wealth management, 6 months in derivatives, algo trading, and a year in FinOps. Currently doing masters in quantitative finance in Europe. What do you think should be the ideal country in Europe to work in trading role? Any other software to learn apart from Python for algo trading? Depends. Many companies use Python for algo trading. Many companies use R as well for trading. So that totally depends on the company that you will be a part of, which you will not know in advance. The country which has most opportunity is from the depth of the market. I will say 3: UK, France, and Germany. So UK, France, and Germany. UK is still a part of Europe, not a part of EU. But in finance, the options are more where a country has more money, as simple as that. So the biggest one, of course, is US. And then if you are looking for Europe, countries like UK, France, and Germany, they are the biggest in terms of the number of people. 60 million people in each of these countries, 60 to 70, depending upon which country you're looking at. And hence the depth of the trading in these countries higher. That's the trading role which are there. Many companies are moving because of this Brexit situation. Many companies have moved their European headquarters from UK to Europe, or this part of the Europe, on the right side of the Europe, which are Frankfurt and Netherlands. So that's where also opportunities come, but not definitely in trading, because the depth of Amsterdam Stock Exchange is extremely low compared to stock exchanges in UK or stock exchanges in Frankfurt or even in Paris. So yeah, look for the depth. And when I say depth, amount of money traded in a single day. Simply arrange all the countries based on amount of money traded in a single day, and maximum to minimum. That's how you have to target, especially if you want to be in the trading field. If you want to be in specific trading like commodity trading and those kind of things, then of course there are opportunities in many small countries as well. For instance, in Netherlands, there's a firm called Optiver. They're into more commodity trading, but that's a niche. So again, if you want to move to a niche, then you can select any country depending upon that niche. But that's how I would think about.
So I think we have last two questions, which talk about the roles as financial analyst or the role in corporate finance if we do this program. So Satyam, would you like to answer these? Like, are these career outcomes possible after doing the program?
Are these on questions or are these on chat? Because now
these are on Q&A section.
Okay. Difference between data analyst and financial analyst. Data analyst works just by entering the data and not making any analysis out of it, and financial analysts work with real finance market data. Then we are talking about, one sec, let me just take them. What is the 10 years of experience? So Anil's question is, I'm into financial executive role from TDS with TDS calculation and GST calculation. So basically it's an accounting role to clients on their payments. So accounting and a mix. 10 years of experience with finance profile and you transition to corporate finance. That's very easy because you know how cash works. Look for treasury roles. Because it's about managing payments, and your current role, Anil, is about payment assessment of clients. So treasury is your best fit. So that look for treasury roles, which not cash management, treasury, which cash management is a part of it, but where you are responsible for managing account receivables, account payables, and inventory, working capital. So that's a very, very interesting role, especially you are good with managing payments of the clients. Then you have anonymous attendee eligible to join as financial analyst is my first job. That's what we also aim for. From Vired, you will see many first jobs are financial analyst jobs. And again, guys, financial analyst is a very broad term. Did I even bring it up in financial analyst thing? I did not bring anything from financial analyst because every analyst is a financial analyst. If you're an investment banking analyst, you're a financial analyst. If you are an equity research analyst, you're a financial analyst. So financial analyst is a term. It's a very broad term. Even corporate finance is financial analyst. But depending on which company and which firm and which field you are getting in, you will still be called as a financial analyst. Then, so financial markets is basically these big banks, MNCs, funds winning, losing millions daily in simple terms. Not really. It's also about risk management. It's also about strategy. It's also about private wealth management. It's also about, so yes, wherever the money is involved and wherever you see transaction between money, and it's not just big banks, it can be small banks. Why did you say big banks? I started my career in a small bank. I said 50 people, then moved to a bank which has, or investment bank which has 250 people. It's not about big bank. Wherever money is exchanged, that's finance. So that's one thing you have to keep in mind.
So Vashini, I think has a question that the course is, online or offline. So just for your interest, everyone's interest, let me tell you that this is a complete online program, and the classes are happening live and interactive online mode with the faculties on Saturdays and Sundays. So that's the weekend. 3 to 4 hours is what you need to spend on your Saturdays and your Sundays. Apart from that, we do also expect you to spend at least 1 to 1.5 hours on a daily basis. You'll be getting your projects, you'll be getting your assignments, and simply the answer is the more and more practice you do, the better you become at the skill set that we are wanting you to teach. So it's a 12 to 15 hours kind of a effort and commitment that is required into the program. And if someone is coming from a non-commerce background, as I earlier said, maybe 4 to 5 hours extra he needs to put in. So that is the kind of rigor you need to put into the program. So
So I believe we have answered most of the questions, but if in case we missed out any of the questions, so you don't have to worry, our team will be reaching out to you personally and they will be helping out with all your queries. With this, I believe that we are at the end of this session. Thank you so much, Satyam and Prateek. It was a pleasure having you on board for this webinar. And I hope we helped a lot of people through this webinar and we helped them solve their queries as well. A very warm thank you to everyone for being a patient and a lovely audience. And I hope we will come back with yet another exciting webinar to help you out with more of your queries and questions. Once again, a big thank you to Satyam and Prateek for being here with us for this webinar.
Thanks, Mahima.
Thanks.
Thanks, everyone.
Thanks, Mahima. Thanks, Satyam, and thanks everyone for being.
Thank you so much, everyone. See you next time. Bye-bye.